This is Steve Schwartz with the RQ EDU workshop. It is November 2nd of 2013. The purpose of our workshops, TradeLAB, IQ rooms, are for educational and instructional purposes. It's not a trading advisory service of any kind. It shouldn't be construed as such. Past results are not necessarily indicative of future results. The world is changing, guys, and we know it. And if we're not Quant, we're behind the curve. And Quant is basically what academic statisticians are doing to track patterns or trends in the trading behavior and create formula to predict future market movements. No longer are moving averages or oscillators making it. They can give you some good long-term conditions and define certain market conditions, but the way the trends are changing now on a dime, and you'll see that in the charts, especially this week, you certainly would have to think that you need something that is more predictive, that have formula that basically are monitoring market movements and trading patterns and are predictive in nature. Here's a quote, a testimonial, and we have a whole number of them, but this is the one that we share in the webinar for now, and that's because it's an individual who's an attorney that started trading about 5 years ago, struggled for 3 years. 2 years ago he found us and practiced with us, didn't do any live trading for 6 months, and then he came in touch with us, our ArcuTech, which is following the money trail. And this ArcuTech shows you price velocity. It identifies where the momentum is and basically helps you identify where your very best opportunities are. So no longer do you have to be an individual fixed on one instrument like the E-mini, or an oil trader, or just be a currency trader. Now you can be in a multiple, with this tool, it's called the ArcuTech, you can be a multiple asset class trader. And this tool was a game changer for Len. He's a retired, semi-retired attorney now. His whole plan 5 years ago was to retire. He, in the first 3 years, just couldn't see himself doing that because he wasn't trading proficiently enough. Now he is almost there, where he's winding up some class action suits that he's involved in, and he is well on his way of consistency, generating anywhere from 5 to 7% a month. That's pretty much the goal that anybody should go after, and if anybody believes that they should be making more, they're kidding themselves. I want you to get to know Joe Rios in terms of what his background is. He is a Wall Street insider. He goes back to 1988, but what makes him the insider was he was one of those geeks that started writing these algorithms that were predictive. He's one of those gifted mathematicians. His background started in architecture from college. He wanted to be an architect, but then he got the bug, and he heard about trading stocks. He learned about it, and he joined Prudential Securities in the early days. One of the things that he managed that some people will remember is the Quantum Fund. It was one of Prudential Securities' first securities managed accounts, but he managed it with the math that he was building on his own that would be more predictive in nature. And he did receive awards from the Templeton Group and the Oppenheimer funds for his performance. Currently, Joe is my colleague, friend, partner, so to speak. He's currently the president of a professional money management firm registered with the Commodity Trading Commission, as well as the member of the National Futures Association. So everything you're going to see today is held in the utmost highest standards of information dissemination. You're not going to get any hype. You'll only see results, and results are for demonstration purposes once you start seeing some examples. But they were live. When we look at the markets, we have to ask ourselves what's most important. Do you ask yourself what's most important during the course of the day? And I'm going to ask you to, don't be shy and feel like you will get feedback. I'll keep an eye on the chat box. Usually I have Amber Little with me, but she's en route. She's traveling today, and I'm on my own, but I will keep an eye on the chat box. So if there are questions, I will get to them, but if I don't get to them right after you ask them, just understand that I'm following a flow and a structure so you all can learn more and easier. But I do recognize that questions are important as a part of the learning process. So what do you ask? When you turn on the screen, what do you ask yourself? And I'm curious. You know what the trading environment is? Do you have a specific process in selecting a market to trade that might have the highest probability of price action that would give you what you're looking for? Yes? No? I just want to know you can hear me. Dina says yes. Excellent, Dina. Mickey Scott says news, economic calendar, flip on CNBC. Well, Scott, what if I told you you could flip NBC off? John says yes. Well, you have to have a process to follow that's going to help you recognize what the trading environment is and what's going to influence your market selection. Why? Because all of the instruments that are, let's just say, interest rate sensitive are correlated. They're correlated to monetary policies around the world. Everybody would agree with that. Well, if you can't see the correlations, how do you know where the correlation is? And if you can, you know that that's where the highest probability of selection process should be. Agreed? If you know where the correlations are, what the correlations are, wouldn't you agree that it would be easier to find a specific instrument? Maybe it's not what you are used to trading, but find an instrument where the highest odds of price action is if you can identify or have the trade signal that's going to execute for you. Some people say, sometimes I do. Sometimes isn't good enough. You see, sometimes is inconsistent. You can't sometimes do anything in the markets. If you've read enough about professional trading, you know that a professional trader will do the same thing over and over and over again. It's a process that we follow until we are bored to death. That's what we do, and that's why each one of these three elements, trading environment, market selection, and trade signal, is number one to us. They're equally as important because they are intertwined into a specific process that we have to follow. This is the process. It starts with three simple questions. What's really going on? Who's in control? How can I profit? Well, what we're going to do is determine, and I'm going to bring you to my website now. We're going to determine what's going on first. This is what we do each morning. And in order to determine what's going on each morning, we need to know what the overall daily condition of the market is. It's the top of the top-down analysis we've all learned to use. And the top, little known, but the way we see the top of this top-down analysis, or the way we understand daily data, is simple. Through a quant ranking. It's a numeric system. 0 to 3 or 0 to -3 is considered neutral. These rankings are built out of each one of these 9 different components. They're assigned a value from 0 to 2 or 0 to -2. I'll give you guys the link, which is really easy. All I got to do is grab this link right here, copy it, and there it is in the chat box. There is your RQ Crossbox user guide that you can save to your desktop. This is a tool, very different, but I'll tell you where the primary purpose is. If we've got quant rankings of bullish, neutral, or bearish, you can see all of the instruments here. We build out of 5 different asset classes: financials, metals, energy, grains, forex. If you take a look at the pie going into Friday, you had corn, soybeans, natural gas, and crude oil bearish, daily data. Daily conditions are bearish. You had silver, gold, 10-year notes, NASDAQ, the Dow Jones, and the S&P is neutral. You had one instrument, copper, that was bullish, and then you had the currency pairs, GBP, Euro dollar, dollar Swiss, dollar CAD, and dollar yen neutral. Now that doesn't mean anything more than the market's range bound if it's neutral. It's not trending. If it's bearish or bullish, it's trending. Well, very little has been trending up of late, at least coming out of London into New York this day. This is updated somewhere between 6:45 and 7:30 a.m. Joe Rios makes sure of it. He's the chief market strategist for Rios Quant, along with his other responsibilities of managing money. And he makes sure that the algorithms on each and every one of these components of technical data is crunching the right valuations. So if you add these values up in each one of these components, they come up with a synthesis, or they synthesize into a quant ranking of 0 to 3 or 0 to -3. Or red 4, let's take a look at metals, or green 4, there's the copper. That was the one bullish element. You can see gold and silver are weak neutrals, or -3s. Energy at this point was bearish, as we saw in the pie. Both crude oil and natural gas were bearish. Now that doesn't mean because it's bearish you just go off and go short crude oil and natural gas. In fact, quite to the contrary. I'll tell you what this tool does. It's very simple for those of you that are new to us. It goes deep, but I'll keep it simple for purposes of this workshop. Any quant ranking that is neutral, either strong neutral or weak neutral, 0 to 3 or 0 to -3, we bring our position sizing down. We determine that leverage is cut minimally in half, or we are risking no more than 1% of our free cash in our account. No more than 1% if it's neutral. No more than 2% if, in fact, you see copper as a long candidate on your intraday data, meaning your setups, and the intraday data is bullish, knowing that the daily data, the macro technical is bullish, you can then say to yourself, well, the odds are in favor, really in favor of it continuing to the upside and therefore being more aggressive with 2% risk, or your fully leveraged position that is suitable against the resource you have in your account. So it's simple. Yellow, we cut our leverage in half. We take 1% risk, either or. Green or red, if it's matching up, your daily data is matching up, you can afford to be more aggressive. Does that all make sense to you? Would you like to ask any questions about this? I'll take a few questions if you have them. As the questions come, we have what's called the upside list and the downside list. This is the long list, and this is the short list. These are measured, as I said, this goes far deeper than what I've explained, but these are measured by what the pattern description is. There's an algorithm that if you see a 1 matching up, a minimum of 1, matching up with the quant ranking, it will make the upside list from the downside list. You look to these first. So, remember that first question? What's going on? Here it is. What's going on? And in order to successfully manage your money prudently with the right risk management formula, or let's call it risk profile, you've got to ask yourself the first question. What's really going on? The question that John asks, every day do you have to look at 7:30 a.m. and will it change after that? No, John, this is daily data, and it will not change until the following morning. So if you check this at 7:30 a.m., and if you're in Dubai, that makes it about 4:30 in the afternoon, I think. You will be able to determine what your position sizing is. Dina asked the questions, how will this help with intraday trend changes? Dina, it helps if there is an intraday change, but the quant ranking is neutral, it will basically define or help you define your leverage. So let's say your intraday changes, it starts bullish, but then it goes bearish. If you recognize it goes bearish, and you have something that's going down, you want to short, let's say you want to go long crude oil as an example, Dina. Okay, maybe there's a very good setup. But if the quant ranking's bearish, you wouldn't want to be aggressive, would you, on a long crude oil trade? Yes or no? Right. Okay, so you get it now. In other words, the daily data has to match up with the intraday setup you're looking at. And if it doesn't mean that you fade away from the trade or you don't do it. You just do it with less leverage. You cut your position sizing down. This tool, when you read, you grab the link, the tool is for money management. And that is the very first question anybody has to ask themselves. Whoops. What's going on? It's really that simple. What's really going on is helping you determine what your position sizing should be. We all do daily top down. We do the daily trend lines. Well, there's 8 different components in Rios Quant, that RQ crossbox, that synthesizes into a value, a quant ranking value, that, in other words, you don't have to spend the hour on analysis every night or leading into the day drawing your trend lines. And even then, even if you draw your outer or your inner trend lines, your long or short-term trend lines, or you're watching your moving averages or whatever you use, okay, that's still not going to help you determine what your position sizing is. No, Dina, the tool, you're missing the point. This tool is not for swing trading. This tool is for determining what your position sizing should be. If the macro technical is neutral, you cut your position sizing down. If the macro technical, meaning the RQ crossbox, is saying bullish and you see a bullish setup, you can afford to put the pedal to the metal and be more aggressive with your trades. If you see a counter quant setup, counter quant ranking setup, and you like it, you just cut your leverage way down. This is what Wall Street professional traders do. That's what these big, powerful machines do. What you're getting in the RQ crossbox is a condensed, very simple version of what these guys on Wall Street are using. Joe is from Wall Street. He's sharing that with you. You don't see this very often, where some company is going to come about and say, look, your first thing when you ask yourself is what's really going on, and it amounts to what your position sizing should be. No, you may not be too small, Dina. That's not true. And she says, okay, I may be too small to fully utilize this. I doubt it. We have accounts that are minimal in size to 6 digits or higher in size that see the same value. It's a matter of continuing to come, taking a trial, and getting to know that much better, because there's a whole educational process during the trial, which you'll learn about at the end if there's an interest. So let's move on. So now we know what's really going on. We know what position sizing we should be using. Now it's who's in control. Where is the money coming from? Where is it flowing? Well, in order to know where it's flowing, the first thing you have to do is recognize step one in this process. After you've asked yourself what's really going on and you know what your position sizing is, what you have to do is ask yourself what the trading or market environment is. Is it risk on or risk off? Meaning buying equities or selling equities. Is it mixed, where the equities and the treasuries are really trendless? They're sitting almost unchanged. Or are they in conflict, where both equities and treasuries are going up or down at the same time, which has been the rule or the paradigm of late? I won't call it the rule. Well, number two, knowing what your trading market environment is, the RQ Crossbox tells you that. It helps you define your position sizing, and we have RQTech, which is what Len, that attorney, started using, that exponentially helped him. We then go to the tool, the RQTech, and see where to point our attention to. Where is the best asset class? Where is the money flowing to? And once we know where the money is flowing out of and into, we then look for the specific candidates, the specific instruments within those asset classes, and then select which trade signal is most appropriate or conducive to that trading environment. Have I lost anybody, or am I on target so far? Is everybody following? Step one, trading environment. Know what the risk on or risk off environment is, or mixed or in conflict. Once you know that, you know which asset class to look to. After you are looking into a specific asset class, you're then determining where the setup is based on what trade signal you have, and we have three. We have a momentum breakout signal called the RQ channel. We have what's called a trend following, an early formation trend identification signal. It's called GnosTICK. We have an automated system called Einstein. We're going to concentrate on GnosTICK and the RQ channel today. So what's really going on in our tool, the RQTech, that's the tool, is found in the DMS, the Dynamic Market Sentiment Indicator. You'll see it in a moment. Who's in control? That's the Nextreme Velocity Indicator. It's where the momentum has shifted or rolling in and rolling out of. And how can I profit? The two indicators we're going to show and feature today is GnosTICK and RQ channel. The CME Group paper concluded that risk-on, risk-off trading has won increasing interest and popularity in recent years. There's, of course, many ways to construct transactions that are sensitive to those macroeconomic conditions. Of course there are. It's called technical conditions. And that's how we identify risk-on, risk-off, mixed or in conflict. So step 2, market selection. Now what we're going to do, I'm going to give you a little tutorial first. We're going to go to my screen and we're going to do a bit of a tutorial in what we have as an indicator called the GnosTICK levels. These levels help us with market selection as well. But first, the indicator that is the genesis of everything else that you'll see are these levels. The GnosTICK levels are automatically set at midnight Eastern Standard Time. And they are predictive algorithms measuring intraday data, daily data, weekly, actually intraday and weekly data that look back but then point forward. These levels are completely predictive. They're not going to predict what price action, where it's going to go for the day, up or down. That's not what they do. They're going to predict where the resistance levels are. So if you have, and I'm going to ask the question, does everybody feel they have a pretty strong handle on support and resistance? And I'll wait for some answers. Tina says yes. Dwayne says yes. John says yes. Lonnie says yes. Well then, if the majority of you say yes, and you should by now, or you've left this room because it's over the top, this is going to come very easy to you. First, these levels identify the critical resistance and critical support. Whoops, how about that? That's what's happening when you move too fast. Sorry. Let's just change that. These upper and lower red line, simple critical resistance, but they're final targets. Think of this as one big trading field. I don't know, maybe you're a soccer fan. Maybe you're a football fan, American football. Maybe you're a hockey fan. Just think about it as these are the goal lines looking to score your final targets. But life isn't that easy. There's going to be intermittent resistances on this trading field. Resistance 1A, resistance 1B, support 1A, support 1B. Well, in order to understand our logic as momentum traders, if these are predictive, we want to be buyers only above the upper green line. And we're looking to hit target 1 and hopefully target 2. But as I said, life isn't that easy. Our first goal would be nice to hit target 2. Now this is London, and this date, by the way, and I chose it for a reason, is Wednesday, the 30th. So all price action above this upper green line, the bullish NOS level, we are buyers only. So let's just call this the buy side only. And if institutions are running the show, we decide we're going to be joining the institutional bullish team and go with the flow because we know that they run the show. We know who's in control. But we need to know where their momentum is, where their price action is being created. So if we have two middle levels, one defining the bullish side of the chart and one defining the bearish side of the chart, if we're buyers on the buy side, of course, we're only sellers on the sell side. Really that simple. So now use your own understanding of support and resistance. If you're only a buyer on the bullish side, then resistance would mean a target to get out of, not to go short and guess it's going to reverse. Think about people trying to short the market where they had some of their own indicators that said, hey, there's resistance, I'm going short, there's a de-extension, the market's going to pull back. They go through all kinds of wave structure, only to get chopped. So your own understanding of support and resistance applies rather simply here, doesn't it? And I'll ask you can ask questions at this point. If you're only a buyer above the bullish level, then first resistance would be your target, wouldn't it? It's rather objective. And if you're only a seller on the bearish side of the chart, below the lower green line, your support levels would be your targets. Everybody can see that? Everybody aboard with that? Now what I want to show you, now that we understand that these levels only change at midnight, they do not change during the course of the day, they are fixed. And that's how I can say they're predictive. If you can ask yourself how in the world price action stopped right in between resistance 1A and 1B and figure out the algorithms, I'd like to know. Because they jumped way up midnight that day. Take a look at the day before. Price action moved from 4 a.m. clear up to critical resistance and just sat on top of it the remainder of the day into the evening, when then the levels jumped. They predicted an increase in price on the critical resistance and critical support and everything in between, but look what price does. Now, this was a tale of two markets. Remember what Wednesday was? Does anybody remember Wednesday? And what was important about Wednesday? You get a star on your forehead if you can remember. Manny gets the star. Oh no, Mickey gets the, well, Scott was first, Manny was second, Scott first, Manny second. Edmund, how are you? You remember? Yes, it was the FOMC. 2 p.m., Lonnie says, no change in policy. Well, there was something that went on. Watch this. I'm going to move this over. Let's just move all of this over. Now take a look at what happens. This is 12:30 in the this is midday. Price action at 1:30 starts unwinding in front of the FOMC 2 o'clock announcement. Unwinding, it's 1:30, just now it's beyond 1:30. It's now 2 o'clock, the announcement. Knee-jerk from the bearish side of the zone, support 1B, right up to the bullish level. Right back down to its support levels, 1A and 1B. Price action, finally, the bears win the fight. And by 2:30, that bar, we hit critical support. Does critical support hold? Heck yes. In fact, these threes and yellow ones, as you see it, they're telling you extreme oversold, oversold. They're blinking oversold. The one is exhaustion. So we have a rating system, 5, 3, and 1. 5 is the highest quality of price action. 3 is extreme oversold or overbought, depending upon what side the chart is, the price action is on the chart. Look at this, 3, big bar, big sell-off. Another 3, and then the 1 shows up right at critical support that was established 14 and a half hours before it, and a 1 shows up right here in real time. Folks, this is predictive. This is telling you that price action got to an extreme and exhausted itself right at our critical support established 14 and a half hours. A full 14 and a half hours before. Way back here. Now, let's just take this aside now that you know what side the chart is on. Take a look at the notes. Talking about correlation. Let's open this up. And go to that same time frame. We had yields going down, prices going up. Now we're getting close. Now we're up near technical resistance. Hits technical resistance. It's 1 o'clock. You take a look at this 5-minute chart. Plummets to support 1B, bounces, and then holds its critical support at the same time. Within that half hour that the S&P did the same thing. This level was established at midnight. And all this is applying your own understanding of support and resistance. Now you're probably asking, well, how could I have taken advantage of this? Well, you haven't heard me tell you you could take advantage of it. This is not a coulda, woulda, shoulda show that most of these other companies do. This is just pointing out the genesis of the several indicators that we use. Members, if we don't have trust in these, and I keep reminding members, they're probably sick and tired of hearing it, but I don't care. Redundancy is everything. If we have trust in these levels, we know when the show is over. We know when to stop trading. And quite frankly, if this happened in the morning with the employment number next Friday, we're done with that contract, because once price action hits critical support and resistance levels, we're done. We park that away. And here's the rest of the day on the notes. It just goes flat line right above critical resistance. John says, F-O-R-E-G, you are on Wednesday? You're going to have to be more clear. I'll show you Wednesday. I'll be more than happy to go through examples. Just be patient with me. You want me to go to euro? Euro what, John? Euro dollar? Euro yen? Here comes euro dollar. Haven't even looked at it. Okay, here's euro dollar on the 30th. Right here. Well. Right up to resistance 1A. Straight through to the bearish side. Straight down to support 1A and 1B and right back up. Didn't last below more than about 7 pips. Let's see how close that support 1B was. That's 195 against 05, 10 pips. It spiked, the wick came below 10, and then bounced right back up. That's accuracy. That's predictive. Not that the price was going to do this, but if price was going to approach this, it would stall. But here is the perfect example of a random move that a report creates that shows you what these levels can do. This is the 15% when classic pattern people like myself, I'm an expert in it, will tell you that about 14% of the time the market will act randomly. That 14% of the time is when reports get announced that you just don't know. Well, we didn't know this was going to happen. What we knew is that we had our levels. Yes, it was showing before the announcement. So was the equity market before the announcement. But then it started weakening. The equity market was bullish, and so should the euro follow that. But the equity market started unwinding much earlier. Why would S&P or the ES unwind earlier? Because it's the benchmark. That is one of the instruments that define the trading environment, and that is precisely why we ask you to ask yourself the question, what's really going on? And the trading environment is defined by the E-mini S&P and the notes. Does that make sense, John? Perfect example of what these levels do. They win your trust. And if something can win your trust as simple as these horizontal lines, and there's far more to it like the 5s, 3s, and 1s, the rating system of the quality of momentum. Here, take a look at this. I showed you the 3 and the 1 approaching. Let's just do it one more time. Here's the 3 and the 1 approaching support 1A. I'm sorry, critical support 2, target 2, right here. Let's take a look at what notes showed up. Notes are a completely different instrument. 3 and a 1. Two completely different algorithms. One is identifying support and resistance, which all of you understand. Okay? Now take a look. I took a pause because I was reading a question. Look at that. Oh, guys, these are two different instruments. I couldn't cherry pick this if my life depended upon it. It just happened when it happened. This happened at 4:30. This happened, 2:30. This happened, well, let's just see where the 1 showed up here. See how close it was. The 1 showed up on the close of the 2:30 bar, and the 1 showed up on the 2:35 bar on notes. There was a 5-minute lag behind the notes finally hitting its exhaustion at critical support versus the S&P. But look where the 3 and the 1 shows up. And then a 5. But you got 2 1s here. Now you say, all right, bearish 5s here, right? Good quality momentum. Yeah, it's good quality bearish momentum. 5 is the best, but we've already hit critical support, so we're done. We don't care what number shows up. It's over with. Does that help you out, John? Walter asks a question. Any relationship between the instrument's ATR What is that, the average true range? And the range of the two in the red lines? No. I'm afraid not. And if they're similar, that's good. But no, these are proprietary algorithms that Joe wrote, Joe Rios wrote like many, many years ago. Good, John. I'm glad you get, I'm making myself clear. And Walter, I promise, I sent you an email. We can do a coaching session early this week, okay? We haven't forgotten you. We'd love to be able to help if you need it. But it'll be good. You can ask me all the questions you want in the coaching session, one-on-one. I'm speaking to Walter, who is in trial, folks, and we give one-on-one coaching. So let's move on. I wanted to show you what the levels are, why our members are as emotionally vested in these levels. They trust them. It's really just gets down to that. Now, there's a few things I'll show you. I'm going to go back to my slides because I was unable to save some of them. I'll get rid of this. This is my dashboard. This shows me where Nextreme is, where the velocity of momentum is. Now, this is on the close, so momentum is not going to do us any good. I couldn't connect live feed today, so I'm going to come out of my dashboard. I'm going to go back to the slide presentation, and we're going to go into the explanation of step one in identifying the trading environment, risk on, and then go into the two other process steps. So let me just do this, get rid of this, and we'll be good to go. Everybody see my screen okay? Yes? Okay. Getting the right feedback. Everybody sees my screen. Good stuff. Okay. So here, trading environment, the DMS in this column tells you what the trading environment is and what should be correlating in the different asset classes. DMS, I break this template into the five different asset classes: financials, commodities, risk commodities, which are crude oil and copper. And this is an older chart, but it serves the purpose of showing the risk on, risk off. Here are your currencies and currency futures. Here's the independents. Independents have no correlation to interest rate sensitive contracts. Independents like soybeans, wheat, corn, natural gas, well, they are affected by the weather. The wild cards have a very low correlation. Risk off looks just the opposite. They've got bearish momentum in the ES, the YM, E-mini Dow, E-mini S&P, E-mini NASDAQ. Look at the bullish momentum. That's risk off. That's unwinding of equities and going safe haven to treasuries. And take a look at what's going on with the majority of the currencies. They're selling off against the dollar. Well, there was an opportunity when we're risk off, we look to gold, silver, the wild cards, or the independents. Here, it's mixed. In a mixed environment, we'll look at the dollar-yen. Conflict. Now, you'll see that momentum is basically mixed, where it's not all bullish or bearish, and sometimes it'll all be bearish or bullish, meaning the S&P, the stock indices, as well as the notes. Conflict, we look to the independents as well. So mixed or conflict, we look at the independents. Risk off, we'll look to short currencies or go long currencies, depending upon what they are against the dollar. Here's an example of step two. Now we've identified conflict. Conflict means we look to the independents first. Here's natural gas. This was a natural gas trade that Edward did in the trading room. We broke below the RQ channel right here, bearish, got stopped in, and took the ride, first stop down to 61.70. So that's almost 2 points, 190. He scaled out, he had a stop up here, and then came out of the other position, and then again came out of the third. So he lost a couple bucks here. He made a couple bucks here, 7 points, and he made just a few points, 2 points here. This is how we scale out. This is the trade I did that same day. Remember, here's gold. It was bullish. Nextreme's bearish. He went short. Gold is bullish. In Nextreme, where is the money? Who's in control? It's the institutions, but where's the money flowing? Look at how strong that reading is. It's a very strong, in fact, the strongest of all of these readings. 1.6 was it. Gold was the big dog at that moment. I turned to gold. This is my trade. Here's the 5. That's the GnosTICK trade. That's the early trend formation. Well, this was an early indicator in zone 2 on the bullish side of the chart. Zone 2, it's higher risk. I do a 1 lot. There's the 5. I took my $100 off the table. I was happy. We hit the RQ channel. We came up to it, backed off, and I basically came out here as we were approaching it, and then it closed right below resistance, and I was quite pleased to take the $100. Here's another example, crude oil, conflict, but it was very bearish. Take a look at its reading, 0.665. You had nothing here in the financials. Look at the currencies, barely, everything was pretty much mixed. Yes, the independents were looking good, but crude oil was stronger than any of the independents, so I looked to the crude oil. And I'll show it to you. I hope. No, I don't have it, unfortunately. I left that slide out. I'm so sorry. Well, anyway. Here's the TradeLAB and its performance. This was what I did in the yen. This was Friday. I had the Japanese yen. We were risk on. Okay? It really, take a look at all of this. Dollar strength. Right across the board, Euro weakness, New Zealand weakness, Aussie weakness against the dollar. I went to the dollar yen, and I was looking at the reading, and I'm saying that's too good to let go. There was a 5, then price action broke above the RQ channel. I put my target right below critical support, or critical resistance, which was my final target, and I was clearly out, and I was very fortunate to grab the what was 28 pips. This is natural gas on November 1st. EP's trade. You can see these blue candles. This is a visual aid where if you break the RQ channel blue bullish level, the candles are blue. This tells you what side of the RQ channel the market's on. If it breaks the bearish magenta channel line, it will turn bearish. It's a very helpful tool. I don't use it because I'm just used to watching the bars in its normal colors. So he had 2 trades himself Friday. The NASDAQ and the gold. John, that's right, John was with me. John, were you with me on this one? Okay, this was not this trade here, but my yen trade, my dollar yen trade right in here, right? This is where we had our session? Or were you in the TradeLAB? Yeah, okay. Yeah, all right, very good. Yeah, I was in a coaching session with John, who's in Dubai. And then I had to leave you, but that's what the end result was. Okay, so we got that clear. These were Edwards trades in the TradeLAB. He caught the NASDAQ and he caught gold almost at the same time. This trade was put on right after he took over the TradeLAB from me at about 8:40, and then pretty much was out by 9:30, and by the time he had already gotten out of NASDAQ, he had then captured a RQ channel breakdown trade and finally broke and came out of the two positions, and I'll show it to you a little bit closer up. This was the NASDAQ trade in closer up view. He bought 3, he sold 2 at his first target, which is midway between the zone, and then he trailed the stop and finally got stopped out at 81.75, which was just about break even. So he took the profits here on 2 and broke even on the last one. Here's the closer up perspective on the gold. He sold 2 gold right here. 1 came out at the midpoint of the zone. He then had another target at 75%, and this is where he came out. So he came out of the first one at 11.20, 13.11.20, which was 150, and then came out of the second one at 13.08.90. So that's 380 and one, I don't know, 150, right? 530 on the gold. This is in TradeLAB. This took care of a full 3 months of the TradeLAB subscription, if you caught it. John also, thank you. Well, good, John. That's right, John. You told me that your system or what you were using pretty much identified the entry, I think, right? And close to the exit, if I recall. KW is asking the question, what are the red and green bars at the bottom? Ah, good question. This right here is a histogram, and you see right here where there's a number in the right-hand price margin, the vertical margin? That's your risk-reward ratio on any given candle. And we only look for 2 to 1. So at the time that this was shown, at this moment, it was 2 to 1. Dina asked the question, what entry identifying system is John using? You want to call it something, John? I don't mind. Go ahead and call it something. In fact, I'll unmute you. Here, just a minute. I'm now unmuting you, John. You can speak freely.
Yeah, I'm also using a system which is developed by myself, which calculates the support and resistance, which is almost identical to these levels, and the where to go short and where to buy on a daily basis, where to buy and where to go short. And this system, which I'm used to this only for 2-3 days, but I learned more by seeing the videos and all, but it adds a very good value for the system which I was using. Now I can be very precise. My entries and exit will be almost on the extremes of the movements that I have shown Mr. Steve last day. So
And
where
John,
I go, yeah.
that's a great big that is really a great it it it's a salute to us, but I want to thank you because it makes the point of what I mentioned earlier, doesn't it? That if you have a strong understanding of support and resistance and you have something that can build the confidence around that,
Yeah.
you can be better. Well, that's really what
It's
it gets down to.
fabulous. Yeah, this system is fabulous because you know which instrument you have to trade, whether to have to trade or not, and which sector we have to go, and in that sector which instrument you have to pick, and you look at the levels. There is nothing you cannot fail a trade. I don't think so.
Well, no,
Yeah,
fading a trade is guesswork. But John, I want to, before I thank you, wholeheartedly, please tell these people that this is not a solicited testimonial, that you and I know each other only 3 days, okay?
yeah. Yeah, we know only 3 days, and I have not paid even $1 for this service which you are giving, and oh, it's excellent. If you understand the market properly, this is an excellent tool which you are showing.
Thank
And
you very much.
last day itself, I'm say in one account I made more than $500, another account I made some $200, $300. Like that, I made almost $1,000 last Friday.
Yeah,
So
well,
I
that's
could
so,
have made more.
huh?
I could have made more, but I just because the beginning I only tested some this thing. I
Yeah,
went
but John, we
long
could
in
always
USD.
make more. But that's not,
Yeah,
it's never ending. Can we ever not make more?
yeah. No, I went
Okay,
long in the USD JPY and CAD JPY. Then I went short in gold. Then I went short in GBP AUD. Those are
right,
the trades which I have done.
right.
Yeah,
Well,
it's
well,
excellent.
thank you. I can't thank you enough. Honestly, I did this. You know that I surprised you by asking you to speak up, but I thought, you know what? Why not? If a gal is Dina in Colorado is asking me what entry system you're using, I'm not
Yeah.
intimidated by that. Some companies
No,
would say,
even
wait a minute.
yeah,
Some companies
even
would say, hold on a second. I'm not going to do that. What is it? What is John competing with me? They would get paranoid. Totally the opposite. Okay? I just selected you because she asked me about your system, and I just off the cuff spontaneously crossed my fingers in hopes that you would at least be kind enough to give me your comments, good or bad. So there you are.
yeah, even if she or he sends the mail to me, I can share the system also. That's not a big problem. I spend too much money on that, but still I can give it free. No
Well,
problem for
let's you and
sharing.
I let's have Dina take one of our trials, and at that point she can actually get in touch with you and make the comparison. I will have no
Yeah,
problem with it. We are
yeah,
absolutely transparent. We have no fear about what we show people because we know it's real. It's not the magic wand. It's not the magic carpet. It's not going to have you walk on water, but it's real, and what you see and what you experience are real support and resistance levels that will help you define the buy side of the chart from the sell side. And the one thing that John said, folks, that I keyed in on is this. We do not fade against resistance levels, okay? We don't go short on the buy side of a chart. We're only going short on the sell side. when we have the highest relative probability that price action is going to continue or accelerate in that direction. And that's all we can do. Dina's asking me, so John, thank you very much. You and I will catch up the beginning part of the week. I guess we'll make an appointment for another coaching session sometime next week. Thank you very much for your comments. It's really appreciated.
Okay, thank you.
All right, Dina, I will go back one time. I guess maybe you came in a little late. Dina's asking me to define the bullish side from the buy side from the sell side. I'll do that one time. Here you go. See this chart? The buy side is generated once every day at midnight. The buy side is the upper green line. All price action above the buy side or the buy level, you only buy. All price action below the lower green line, you're only a sell side only. The yellow lines are resistances, but they're targets. We don't go short against resistance levels. We're already in and coming out. If the market reverses, we're then going short. Price action during FOMC collapsed and stopped right on critical support. Okay, you want me to show you gold? I'll be glad to. Here's gold yesterday, but unfortunately I don't have all the data because I'm unable to connect to my data feed today. So this was from London, midnight. Levels change. Price action is unable to get into the bullish side of the chart. It's showing a lot of fives, which is showing what we call aggressive accumulation, or aggressive distribution, I should say, right here, and then collapse, only to stop right at support 1A and 1B and bounce, and finally makes its move back into the zone 2. So this, in this bearish zone, or the sell side only, is zone 1, and then below the lower yellow line becomes zone 2. Zone 1, bearish zone 2. Sell side only of the chart. I hope that helps you. Okay, good. I'm glad that helps. John, save that question. Hold on just a moment. Hi. Please save that question. I'll get back to that. It's a good question. Okay? But save it for our coaching session, John. All right, so now let's go back. Now that I've shown you the levels and I've asked the questions and clarified the buy side from the sell side, let's go back. Just kind of rewind just a bit. All right, that way you can see the screen clearly. These are the two TradeLAB trades we've done. This one trade here, you see this little 5? It was telling you that these 5s right in here, 1, 2, 3, 4 5s going in to the 8 o'clock hour. See these accumulative 5s right above the upper green line? These are telling you it's an early indicator. It's a leading indicator. This numeric system is leading you into an indication that the probability is we're going to start trending bullish. These groupings of 5 right in here. You see the groupings of red 5s in here, if you can see it? That's telling you exactly the opposite on gold. Here it is closer. 5, 5, 5, and 5. There's 4 5s out of 6 bars, or 20 minutes of accumulative time that was showing highest quality of price action of the 30 minutes that we just counted in the bars. 1, 2, 3, 4, 5, 6 bars times 5 minutes is 30 minutes, and of the 6 there were 4 5s. This is accumulation above the upper green line right here. It was also breaking above the RQ channel, the 7 setting, and then the 2 setting, and then here it was. All right, so let's review. This is a simple process. It's a 3-step process. What's going on? Know your market environment. Know whether you're risk on, risk off, markets are mixed or in conflict. Go to the asset class that Nextreme or the architect shows you where that real price velocity is and the strongest momentum. Select several candidates and then look at those candidates with a momentum or a trend indicator. The automated system is Einstein. Anybody interested in auto trading, we're starting to promote it. We weren't offering it only to members. Now we're starting to promote it to the public. Einstein is an auto trading system, so if you want to learn more about it or you want it as a part of a trial, pure auto trading, just email me. We'll be more than happy to include that indicator, but it's more for the advanced individual. It is not for the newbie. Even though it's what these people say is if you're new and you're struggling and you got problems, go ahead and buy an auto trading system. That is just the opposite. If you can tell, we're inside out when it comes to our core values. We need you to build a foundation of the levels as you would relate to your own understanding of support and resistance. Then be able to select which instruments are best to choose. Then use it manually. Build the foundation, and then you're ready for an auto trading system because you will feel like you're in control of an auto system. And in our auto system, you can turn it off. It's very flexible. So, sorry for that delay. So, 3-step process. If you learn this process, by the end of a trial, you can identify this inside of 1 minute or less in terms of where your highest probability candidate is and which signal to use. Remember, all 3 of these steps are equally as important. They integrate with one another. And what we want you to do, and this is, we're not asking you to sign up, give a credit card or anything. In fact, just the opposite. If I've captured your interest or the indicators have captured your interest, the levels, the 5, 3, and 1 accelerators as we call them, the RQ channel breakout indicator, there's 3 individual indicators that we give to you for use for 2 solid weeks. We give workshops during the trial. There's coaching, as you've heard, one-on-one if you want it. It just becomes feedback to you. We do one-on-one coaching during the trial, and it is not for any other reason but to have you see what many, many others are now seeing. We're growing very quickly, and have the coach in me or in Ken or in Amber or in Edward help you with feedback during the trial. We teach you during our trade lab. It's every bit as educational as it is moderated and calling live trades out. It's fast, so that is why we do these workshops during the trial, so you can build a foundation of understanding, all for the purpose of one thing and one thing only, and that's for you to make an educated decision. Dina, if you don't have Ninja, you will see the Ninja charts in the Trade Lab, of course. But we have, Amber Little, we have a means of installing Ninja for free and give you free market feed for a month. You get the indicators for 2 weeks, but we will, in less than 30 minutes, Amber Little will install, she's our support manager. She'll install Ninja and the indicators with live market feed for no cost, no obligation, all for the purpose of doing the trial. Where do you get your market feed, Dina? Well, Miris used Ninja, right? Well, that's okay. If you want to get a closer look at these indicators, then just try Ninja. And if you can set it up, Amber will help you if you have any issues connecting your live feed with Ninja. But Miris has Ninja. They have a relationship. And it's seamless. And I promise you, if you see a value in this, do yourself the favor and just take the trial, and then you be the judge. KW, you can do a trial in TradeStation. Send me, KW, an email, once again, to steve@riosquant, here it is, .com, with your customer ID number, KW, and we will send you the files for TradeStation and turn it on. But make sure you take the workshops and some of the coaching. Don't pretend like you're going to be able to figure this out on your own. You're going to get videos, but I promise you, if you're going to truly want to follow this 3-step process, we give you free instruction and tutorials to do it with. This way we know you're getting the best practice out of the trial, and that way at least we're assured that you're going to make an educated decision, because we're not going to try to sell this to you in the traditional manner. We really believe this sells itself. We really believe that. So we don't bother pushing ourselves on you. And if you feel like I'm passionate today, or I'm trying to sell you a trial, yeah, hold me responsible. I'm trying to sell you into the concept of taking a free trial. That's fair. But all other decisions, the important decisions, are your own, and you have to be the judge of it. So all you have to do, and you can do it one of 2 ways. I'll do it this way, where I'll put this link in the chat room. I'll copy it, and hopefully it'll work. No, it won't. Yeah, it will. It should. Let's see if I can't copy it. And here, the link should, it's not working. All right, so this is what you do. Email steve@riosquant.com. Well, maybe now I can get it. There we go. There's questions coming, and I'll be glad to ask. There you go. There's the link. If you want to fill it out for the trial, do so. Be my guest. Okay, there's some questions. John says, can you use these for binary options? Heck yes. you can use the RQ channel on binaries. I mean, on the instrument that you're doing the binaries on. And we'll show you what time settings to use on the RQ channel indicator. Graham, I know you're going to get this taken care of over the weekend. Joe Rios emailed me later in the day, and I promise you, you will be getting the indicators today or no later than tomorrow. I promise. In fact, when I put you guys on hold, that was Joe, and that'll be the first thing I take up with him. Lonnie, you're more than welcome. Bernard asked, does the system work with AT platform from Infinity Futures? No, but I think Infinity uses NinjaTrader. Doesn't it, Bernard? Check it out. We'll be more than happy. So what you're saying, Bernard, is you don't have NinjaTrader. Okay, this is what I'm going to do. I am going to hang back and ask more questions, but what I would like to do is just close this, not close it, but end the recording. This way, it's ended properly. This was Steve Schwartz with the RQ-EDU workshop, having presented GnosTICK and the RQ channel basics and where the money flows. Thanks very much, guys, and thanks for attending.